Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, July 10th, 2020. I am Frank Ochoa, aka PivotBoss. Before we get to the charts, I would like to invite you to join me for a webinar event next Wednesday, July 15th. There are a panel of speakers here. I will be the first of 4 traders that will be speaking here. If you go to pivotboss.com and go to news, you'll go down to the latest news here, Traders Exclusive Webinar July 15th. If you click on that link, it'll take you to more information here about who's speaking and the topics that you'll be encountering here. I will be first up at noon from 12 to 12:45. We'll be talking about making money with trade sequences, a portion of our Swing Trade Pro 2.0 training. Julie Mance will be speaking, Dan Passarelli, and also Paul Lang as well to finish out the panel there. So please join me. If you go to register here for this Traders Exclusive Webinar, you can click this link. It is a link for our site there. And even if you cannot join live, please register because it'll give you access to the recordings later on down the road. So please register for that event, even if you can't make it, so that you can get the recordings at a later time. I would definitely like to see you all there next Wednesday, July 15th. Again, I'll be going on at noon. Again, space is limited there, so please register for that event using this link here or even the one down below. All right, let's get to the charts here. If we take a look here at the ES in a daily time frame here, you'll see that the ES right now is still holding in this narrow range that's developing at highs. One thing we talked about is this narrow 3-day range here, and yesterday price broke down through the bottom of that range and then rotated back higher into the range. Typically speaking, that can look like a failed low that leads to the next boom higher. However, in overnight and pre-market trading, price has spent a lot of time trading in the lower half of yesterday's range, and there is still the potential to see perhaps a break through 3100 that could lead to maybe another rotation down. But at this moment, we still see a bullish or rising PEMA trigger zone. We continue to see a bounce out of that area over the last 2 sessions so far. And again, if price can continue to keep 3080 to 3100 bid, there is a shot to slingshot higher here down the road. Again, we got narrow range over the last 3, 4, and even 5 sessions, and that suggests that expansion could be coming here pretty soon. Again, keep an eye on 3080 to 3100. If price can continue to hold that zone, we may stretch it up toward 3230 and perhaps even higher. Now, based off of the ADR here on a 3-day basis, or even if you were to look at a 4 or 5-day basis, if we increase the ADR here, again, you'll see the compression down here, and then you'll see how many points that we could see once we get that expansion or that move. 175 points on a 5-day range basis as it's compressed. If you use this low, 3105, and forecast higher 175 points, you start getting your upside target into 3280 based off that measurement. If you're using a 3 or 4-day range, you may be looking at about 125 to 140 points higher from that low. Same applies if it breaks down, though. We can use the high or this high here as it looks for a push downward. So we'll see how it plays out here, but again, keep an eye on that 3100 zone. If price can continue to stay above that zone, we have a shot to squeeze here. All right, let's take a look here at the NQ. Now, the NQ has been quite bullish overall. It continues to see higher highs and higher lows day over day. We saw a breakout here that has led to a significant push higher, and we have not tested the PEMA trigger zone in a while. PEMA trigger zone is down here, 8-period average is there, and you can see we haven't even tested the 8-period average at all this month. Last time we tested it was the last trading day of June, and now we've been straight up here in July. Again, the market could be stretching toward 11K, another 200 plus handles above. And you can see from the low of the month, here, if you forecast our average daily range here, or average monthly range in this case higher, you're going to get a target zone of 10,884 and up to about 11,153. So again, that is the zone here where we could be headed here very soon. You also have a 10,942 100% target from this key range. So remember, we talk about key ranges from that high to this low. It compressed. We've got an expansion. Here's a 50% target. The 100's here. That's 10,942.75s. So we still have more upside ahead, even if we see some sort of pullback as deep as, say, 10.4. It could still be a buying opportunity for a continuation toward that area. A failure to hold 10.4 could lead to a bigger rotation downward. So that's going to be the framework that we're using here for the NQ moving forward. If we take a look here at crude oil, you'll notice that crude oil has pulled back a bit within its uptrend. It's had very, very curious price action to begin the month of July. Again, we talked about this before. This little range of price action right here is very odd. After we've seen volatility in price action, we pretty much went quiet here. One big flush downward. You can see the previous month's close here is the high of the day today, and the monthly pivot point is the low of the day currently. Now again, this market has been trending higher, and so this pullback right now could offer a buying opportunity for a continuation higher down the road. Again, as long as price continues to hold 38 here, this low part of the pivot range, which is last month's midpoint, we have more upside that could be seen. So right now, this pullback could be a buying opportunity for perhaps a continuation higher. All right, lastly, let's take a look at gold futures here. You'll see with gold futures, this one's up about 0.6%. It also has been very bullish. Once we got this squeeze here and we saw a little pullback here starting to develop, I mentioned that this right here looked like a pretty solid breakout, and any pullback needs to be defended between 1750 and 1760. That's right where we got here, and it squeezed. Secondary pullback here also needed to be defended in that zone. We saw it, and you can continue to see that this PEMA trigger zone remains intact as price continues to trend higher. Now we are holding at these highs within a fairly narrow range, not super narrow, but 3 days here. You can see support right there at 1800. It's trying to hold above 1800 proper for a while, but if there's a failure here, it could wipe out a little bit here back down for another potential buying opportunity. Again, the goal was to get to 1831 and 1957 ahead. Got very close to 1831, 1829.80. That's the 50% expansion from a large key range. The next one up takes you way up into the 1957 zone. So we still have quite a bit more upside that could be seen ahead based off the longer term key range. So again, short term, any pullback could still be a buying opportunity for continuation higher through 1830 and into 1900s. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Again, it is Friday, so happy Friday. Please be sure to like, share, and subscribe. And also looking forward to seeing you at the webinar event next Wednesday, July 15th. Take care, and I'll see you in the trading room.